At the end of 2022, I'd built a dividend stock portfolio worth £45,294, and over the year it paid me an average of £114.98 a month in dividends. So how has my dividend investing portfolio performed over the first quarter of 2023? And what are my plans for the rest of the year? In this video I'll provide a detailed review of my dividend stock portfolio and the dividends that I received from January to March this year. I'll also talk through the stocks that I bought or sold during that time, and discuss my investing plans and thoughts along the way. Finally, I'll give a quick update on my income and expenditure for my rental property investments. My portfolio currently stands at £48,891 invested. I also have roughly £910 in cash, ready to deploy once I see a good deal. The market value of my portfolio has been quite volatile since the start of the year, starting off at a 7.74% unrealised gain, having a high of 13.51%, a low of 4.76%, and settling at 8.29% most recently. However, as a dividend investor, the market value of my portfolio is largely irrelevant to me, as it's my intention to never sell any of the principal. My focus is on the income that the portfolio generates through dividends. My mission is to build a cash-generating asset that pays me a passive cash flow every month. And any cash generated is reinvested back into the portfolio to buy more shares that will pay more dividends. My investing approach is a very simple one, which is to consistently buy good companies and ETFs each month, hold them for the long term, and reinvest all dividends. If you are looking for meme stocks and get-rich-quick schemes, then apologies, but I don't think this channel will be for you. My approach is to try and build wealth slowly and steadily. I do have a video explaining my investing strategy in full if you're interested, which I'll link in the description below. So if we look at what's contributing towards the returns, we can see that the majority of my portfolio is in the green and has yielded a return on my investment. Disney still remains my largest unrealised loss. And then looking at how my portfolio is split, we can see that the chunkier slices of this pie chart are my ETFs, which is always my aim. I do want the bulk of my portfolio to be ETFs, to give me a solid, safe foundation for income. Breaking that down further, and in the interests of transparency, this is my full portfolio, showing all of the unrealised gains and losses. I feel that most people do try and hide their losses, but I want this to be a true and fair reflection of what I'm experiencing. Now looking at the intrinsic value of my portfolio, based on free cash flows, it suggests that my portfolio is undervalued at the minute. This valuation model doesn't take into account my ETFs, so it's just the individual stocks that I own. And we can see that the market value is around 30k, but based on the free cash flows that the businesses generate, the valuation will be closer to 39k. If you've watched these updates regularly, you might have noticed that the fair value has decreased quite a bit over the last few months. This is partly due to me selling a number of positions and reinvesting back into ETFs, which don't show on here. And also we have seen a bit of a downturn in the market recently. So it's not a cause of concern for me, and as it's based on market value, it will continue to be volatile. The apps that I'm using here are Trading 212 and Simply Wall Street. If you're interested in starting a portfolio with Trading 212, I do have a link in the description where you can use my code and we'll both get a free share worth up to £100. I've also left a link to Simply Wall Street in the description as well, which is a really nice investment tool that I use to evaluate companies and track my portfolio's performance. Over the 2022 to 2023 tax year, I managed to contribute £11,103.73 towards the £20,000 limit in my stocks and shares ISA. This represents 56% of the allowance. And this is just purely my own contributions. As with a UK stocks and shares ISA, any reinvested dividends don't count towards the limit, as they are a gain generated internally. I would love to get closer to the 20,000 limit, but I still want to enjoy life and don't want to be too restrictive, because where's the fun in that? I've always tried to invest a minimum of at least £750 each month, and this graph shows how my total amount invested has grown over time. These are purely my own contributions, without any reinvested dividends. I have been really consistent at doing this each and every month, which you can see from the upward trajectory on the line graph. I'm a big believer in paying yourself first, which means that once I get paid my salary, I immediately move £750 into my portfolio. Then throughout the month, I try and keep my spend as sensible as possible, but again not being too restrictive. Then if there is any cash left over at the end of the month, I have the option of paying that into the portfolio as well. In the long term, I want the snowball effect of compounded reinvested dividends to boost my portfolio in a way that the income can start to contribute towards my monthly expenses. The dream is for my dividends to fund my lifestyle and enable me to retire early. But even if I don't achieve this, then I'd hope that the portfolio would help to pay for numerous family holidays or even allow me to work part-time. And I'll let you know how much I'm currently making in dividends later on in the video. So what stocks have I been buying and selling over the first 3 months of 2023? As usual, I've topped up my ETFs with around £2,044 spent. And I've also bought some more of my blue chip dividend payers when the price became attractive to me and my portfolio. And now looking at the sales, I've fully sold out of 3 positions: Ashmore, Aviva and SSE. I have held these for a few years now, and I was never fully sure whether to buy more or sell. However, after taking a deep dive into all 3 companies, I have decided to sell. This might turn out to be the right call, or I could live to regret it. But all that matters for me is that I'm happy with my decisions, which I am. So after these buys and sells, this means that the overall yield for my portfolio as a whole currently sits at 3.63%, which equates to around £1,773 per year in predicted dividends, or £148 per month. There will always be a discrepancy between my actual dividends received and my predicted dividends, just due to the timing of me purchasing shares and then being eligible through the ex-date of the dividend. Now let's look at the dividend income I actually received over January, February and March. In January, I received £18.74 from 3 different companies. Given that I earned an average of £114.98 over 2022, this was a bit of an anticlimax. But January is typically a low month for me, and I'm sure this will even out over the course of the year, as I do expect an increase to the £114.98 monthly average that I got over 2022. In February, I actually received £75.03 from 6 different companies. The dividends that I got from AT&T, Greencoat, JP Morgan and Verizon felt like really nice amounts this month. Before I show March's dividends, which is the largest total this year, I just want to look at those 4 stocks and see how they've increased over my time investing. Look at the amounts from the first payments that I received, compared to the amounts from the latest payments. In fact, the total for my first payment was £5.25, and the total for my last payment was £64.54, a 1,129% increase. Again, I'm not an investment guru and I've not done anything special. All I do is allocate a portion of my monthly salary to dividend-paying stocks and ETFs. It's the consistency that is key. Finally, to finish up the dividend update, in March I received £185.17 from 13 different companies, including some chunky ETF payments, which is just because they are my largest holdings as mentioned earlier on. So looking into this graph, which shows all of my dividends since starting investing in 2020, we can see that the numbers have been increasing year on year if we compare the purple 2020 bars with the blue 2021 bars, the green 2022 bars, and the yellow 2023 bars. The average monthly dividend in 2020 was £45.29. The average in 2021 was £77.88. The average in 2022 was £114.98. And the average in 2023 so far is £92.98. Again, I've not done anything special to hit these numbers and increase them. All I've done is stay consistent with my contributions and dividend reinvestments. That's all it takes. One of my short to medium term goals was to earn an average of £150 per month consistently. In order to hit this at the current yield, I would need a portfolio size of around £49,630, and will therefore only need to invest around a further £739. If you've watched these updates regularly, you'll see how I've got closer and closer each month due to my consistent contributions. So it's nice to know that by next month, and another £750 contribution, I should be well on my way to £150 per month as an average. And once I've hit that milestone, I'll look to try and earn £200 per month as an average. As always, all dividends stay in the portfolio and are reinvested into purchasing more shares. My portfolio has earned a total of £3,168 in dividends since I made my first share purchase back in December 2019. By reinvesting the dividends, this has increased my portfolio from £45,723 to £48,891, which is a growth rate of around 6.93% so far. As more dividends are received and then reinvested, I do expect this percentage to get larger over time. I also invest in real estate and currently own 2 buy-to-let properties. So over January to March, this is what the finances look like. The rental income has remained constant, as has the management fee and the mortgage. February did see some repairs and maintenance costs, as one of my tenants reported that the smoke alarm was beeping, even after the batteries had been changed. As a responsible landlord, I immediately instructed the management company's maintenance team to inspect and fix this. In the end, they replaced the smoke alarm with a new one. So my pre-tax profit over the period is £2,050. All of the ins and outs for my rental properties just sit in a separate bank account, and the income covers the mortgage payments and the tax bill. I also use it as a bit of an emergency fund and dip into it every so often if needed. Another update, I have secured a tenant to rent my car parking space. So one of my flats has a parking space, and it is always offered to tenants when they're looking. However, no one has ever needed the space, so they always end up renting my apartment without it, and it's just sat there vacant for a few years. After having a conversation with my management company, they advised that they could manage this as well, which I didn't realise was part of their services. So it's now been let for a 6-month minimum contract at £80 per month, which is another nice source of pre-tax income. So what are my plans for the future of this portfolio? Again, it's quite simple, and that is to carry on contributing towards dividend-paying stocks and ETFs into the long term. Out of interest, I decided to forecast what my portfolio could become over the next 10 years. I don't want to predict anything other than what I can control, within reason, so I'm assuming that I'll carry on investing £750 per month, that the dividend yield of 3.63% will stay the same, all dividends will be reinvested, and that there will be no dividend cuts or dividend raises. It's a bit of a crude estimate, but really motivating to see. We can see that after 5 years, I could have a portfolio worth £121,000 that's generating £356 a month in dividends. And after 10 years, I could have a portfolio worth around £195,000, generating around £571 a month in dividends. Although that wouldn't be retirement money, it would definitely help towards paying for holidays and bills, and would really help to kickstart the snowball effect. I'm not planning on adding any new positions to my portfolio, but I am likely to sell out of a few more positions. I would like a smaller, more focused portfolio, but I am happy with where it is at currently. The plan is just to keep investing as and when opportunities arise. Now that you've heard my portfolio update, I'd be really interested to hear from you, the viewers. How has your portfolio been performing recently? Do you agree with my buys and sells? And is there anything that I've missed from the video that you'd like to ask? Let me know in the comments section below. I'll be reading and responding to every message that I can. I hope that you found this video interesting and informative, and I hope that it's given you inspiration and ideas for your own personal finances. If you have, please like the video and subscribe to the channel to make sure that you don't miss out on any future videos. Thanks again for watching, and I'll see you in the next video.